Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Started with the low time frame bullish scenario where we do expect a bit more upside before then another move to the downside in a zigzag pattern, which is a 5-3-5 wave structure in an ABC, where for me the interesting targets for a wave B are the two target boxes that we have over here. The one in white between 30.5k and 30.7k, and the resistance area in blue between 31.1k and 31.3k. Now, depending on the reaction we get over here for a wave B, the targets to the downside are as follows, sitting between 28.8k and 29.1k. We have some nice support, but also down here between 27.8k and 28.2k. And if price would go very deep, then we still have one down here between 26.2k and 26.5k. The invalidation of this scenario would be for price to reach these highs 31.8k. If we go to the bearish scenario, we're looking for a three-wave structure to the downside in a WXY, which is a 3-3 and another three-wave structure to the downside, where inside wave Y, we're looking for a zigzag in a 5-3-5, where this is then an ABC, where wave C reached the 1.618 trend-based fib extension taken from the high to the low of A to the high of wave B, which is a rare target for a wave C, but a target nonetheless. Inside of wave X, we then have this three-wave structure, and we are now looking for a move to the downside for wave Y, where the most common target area for wave Y is between the 1 and the 1.236, sitting between 28.5k and 28.1k, pulled from the high to the low of W to the high of X. And what is interesting about this scenario is this over here. What you see is a piece of price action from history, and over here we had this as a three-wave structure, and just look how nicely it is overlaying price action over here. And this piece of price action comes from this part over here, where we also had a very shallow retracement. First a move to the downside, very shallow retracement, before then a move to the downside once again, and then we moved impulsively back towards the upside. And you know, history, it doesn't repeat, but it can definitely rhyme. And if you look at this bars pattern over here, this price action, then it looks incredibly similar to what is happening at the moment. And that is why the support area around 28k for this scenario is so important, for then maybe a bounce over here and then moving impulsively back towards the upside. So definitely keep your eyes on that one. If we then go to the low time frame scenarios, I should say, I have to draw on the chart a little bit. Usually I prepare a lot of things, but this time I want to go over a couple of points that I wrote down over here, because this range has been very complex on the micro time frames, and I'm basically going to go through different scenarios and talk to you about why something is less likely or more likely. So the target boxes now are not important. First of all, let's look at the volume from this low to the upside, right? From this low to the upside, the volume on the lower time frames are in the high. If we go to the 5-minute and we zoom in, you can see, and this is important, the highest amount of volume of this move to the upside comes in at the high over here. Now, if you look for an impulsive structure in a 5-3 and then a continuation in either a C or a wave 3, right? So an 1, 2, 3 or an ABC. What you want to see is not the highest volume to be in the high of a move. You want to see a wave 4 before then a wave 5, where wave 5 takes the high but is made on lower volume. We never got a wave 4 with a wave 5 on lower volume. So this being an impulse, therefore, has lower probability. If we then also look at what has happened over here, then price has constantly created bearish CVD divergences while price is moving to the downside. So over here, bearish CVD, and again after my video that I uploaded at 1 p.m, price was moving to the upside, and then again over here on the low time frames, bearish CVD on the 3-minute, pushing price to the downside. All the time, market longs are being absorbed. Then if we go to the target boxes, I had a target box over here which clearly has been passed. As you can see, it was a bit of support going down, now tested as resistance. But what is important is that this was my main area of support. We did have a little bit of support left, which was basically the value area low of this move to the upside. If I take the whole move from the low to the high, you can see over here that the value area low was at least a little bit of support, one can argue, and then potentially in combination with the 886 as you can see over here. So a little bit of confluence, the white line with the red line over here, but that is it. And it's not the strongest support. The strongest support for me was this target box over here, which now then has been backtested as resistance. So you definitely want to see that one pass, right? Then we also saw volume moving down. So this, what I'm doing now is literally talking to you about how I then consider and also use this for Elliott waves, right? So volume, price moving to the downside, but look at the volume over here, right? Slowly and steadily over here, it is starting to increase while price is moving to the downside. That's of course not necessarily something you like to see. High volume can sometimes also be there when there's a pivot point, right? A change in market structure when you end on high volume. So that's something to keep in mind. But then we have to look more locally and hopefully past this target box before looking for upside. But the fact that volume has been increasing is at least something we have to keep in mind as well for the probabilities of the different scenarios. If we then look at a low time frame flat scenario, which is a scenario that we've been looking at in some previous videos a while ago, where this was then an A, B looking for a C in then a 3-3-5 wave structure, then this 5-wave structure has to be quick in a wave C. It's an impulsive move where you want to see a quick move to the upside, but this over here should not be part of a wave C. In my opinion, maybe one can say this is a 1-2, but then you get the same problem being that this has to be a 5-wave move for then a wave 2 and a 3. But if this is an impulse, why is the volume at the high of this move? That only happens with an extended wave 5, which is rare. So therefore, probabilities go down for this to be part of a wave C to the upside, and therefore the probabilities are lower for this to be the end of a 3-wave structure for then an A, B, C to the upside. Now, if we think about this being a W, X, and then a wave Y, which is a 3, 3, and then a 3-wave structure to the upside, then most commonly in a wave Y, you're going to be looking for either a zigzag, a flat, or a triangle. A zigzag has the same problem as just explained. This has to be a 5-wave structure, but the volume is at the high in then a 5-3-5. So that's not that nice. Then you have a flat scenario, but for a flat scenario, you're going to take this low most commonly in an expanding flat 3, 3, and then a 5. So you would expect price to take this low. And in a triangle, well, you know, this doesn't look like a triangle at all, but then of course you want something like this, which at the moment is not something to look for. If we then look at this being the low of something, so that is why we potentially have this as a 5-wave structure to the downside, where the end is then over here, and this is the beginning of the low time frame wave B structure that I showed earlier, where we first move to the upside in B and then go potentially down again in a wave C in a zigzag 5-3-5 structure. Now if we look at the options of this being then the low, and we're moving up for wave B being a 3-wave structure, and the wave B can be complex, then what do we see? Well, first of all, an impulsive structure to the upside, and then again a 5-3-5, or there's a 1-2-3. Well, same problem, highest volume in the high of the candle. So the only thing that for me remains for upside is at the moment a potential complex scenario, where this is then the end of a structure, and this is then a potential 3-wave zigzag, then another complex structure, and then another complex structure. It's just that this impulsive move to the upside over here, which it does look impulsive, but the highest volume over here, you can see the highest volume is right about at the highs, which is not really something you want to see. You want to see this in a wave 3 and not usually in a wave 5. And also, if this is an impulsive structure to the upside, you don't want to see overlap between like certain waves in like a wave 1 and a 4, for example. So how would you count this, right? This structure at the beginning can't really be a diagonal in a 1, 2, 3, 4, 5, right? Then it's a very long wave 1 as well for then an extended wave 1. But if wave 1 is extended, you want to see the volume here and not there. So yeah, it's very, very, very difficult price action on the micro time frame, but I hope that with this explanation you have a little bit of insight what I'm looking for. And if we then go to the CVD, just to say that we do have bullish CVD divergences still for price to move to the upside. All the bearish ones have played out. The bullish one over here is remaining, which you will see over here on the 15-minute time frame. Higher low on price, much lower lows on blue and on yellow, which is a bullish CVD divergence. And also locally over here, you can now see higher low in price, lower low on yellow. You can see the line dumping over here with this one red candle showing absorption of market shorts for then potentially a move towards the upside, which might happen as we speak right now. Now, the probabilities are very simple for me. On the low time frame, I am still looking for a move to the downside, meaning either we go up first and then down, all good, or it's going to be this bars pattern type of move where we're just going to dump to lower prices and say hi to 28K, right? Basically. But on the micro, it's not that easy. On the micro, what I wrote is that it has to do with the target box that you see on the chart, because this is a very simple support resistance flip. We have bullish divergences also here, some new fresh bullish CVD divergences for then a push to the upside. That is very nice, right? So even though this might not be a great impulsive structure, CVD gives us potentially more confidence in a move to the upside. But for me, most importantly, is that price can pass this target box with confidence, meaning you want to see volume increasing, maybe a big candle, a break, and then a back test, and then continuation. And of course, everyone has their own plan, their own strategy to trade certain scenarios. You know, maybe you wait for confidence to eventually a market structure change here, like a back test, then take this high again, and that is your sign of entry, stop loss below, or maybe some more bullish divergences, whatever it is. But now we are back testing this white target box as resistance, which, you know, as long as we don't pass this, increases probabilities to the downside on the micro time frame. So it's very, very complex what has been happening in this structure over here. Can't say if bullish or bearish is preferred. It just depends on this target box. But all I know is we do have bullish CVD divergences, which are still there, with the bearish ones already being neutralized. So a bullish CVD over here, bullish CVD over here. The target of this bullish CVD divergence is this high, and the one of the bigger one is this high over here. So let's wait and see if price is going to take this target box and continue moving towards the upside to finally go to that 30.5K level, which actually has been a level I've of course been talking about already in the past week as well, to wait and see if we're going to actually reach that. So that being said, I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, I'd like to thank you for watching. This video is recorded an hour before the video goes live on YouTube, because I go to Barbie night with my fiance during the premiere in pink. So there you go. Thank you for subscribing. I see you at the next one. Bye bye.